Hi, Bill Bodnar here, Mortgage Market Guide. Thanks for tuning in to our MMG Weekly Recap. So up on the screen on Thursday, mortgage rates hit another all-time low, down to 3.15 on a 30-year. That's the average rate. But a couple of things that were within this, now, while that's obviously great news, and by the way, the Fed should be commended because I think they played an enormous role in helping stabilize the mortgage-backed security market to allow pricing to gradually improve over time. But a couple of things within this that were really great. Number one, the housing demand, which has picked up over the last couple of weeks, I think was a really big deal. And then this other piece, which certainly has an effect longer term on the economy, is this one where the average loan size for a refinance actually ticked down pretty sharp. That means that people are refinancing at the lower end of the income scale or smaller homes, which means that those folks are going to get a nice little economic or financial benefit, which should also help the economy in the long run. So this was a great report going into heading into the weekend. The other thing you were looking at that was really interesting, continuing claims on Thursday. Remember, a lot of bad economic data coming out, but continuing claims and the weekly jobless claims numbers, that's a leading indicator. That's kind of real-time information, kind of giving you an idea where things are going. Well, in the continuing claims, which are people that are continuing to accept unemployment, that number was like almost 4 million and way, way beneath expectations. And so, it's a sign that people are either A, getting hired, or B, have found a job, which at this stage of a recovery is actually a real good sign. So we're going to watch to see if that trend continues week over week. That was a very, very positive development. So heading into the weekend, we see the 10-year note, excuse me, a little bit elevated, more towards that upper end of the range. Now, again, the 10-year note range, 60 basis points on the bottom, 75 basis points on the top, clear as day in our eyes. At the same time, stocks have an unbelievable week. We're now, as we go into a Thursday, nicely over 25,000, which was a ceiling of resistance. It was also over a very important Fibonacci retracement number. So stocks are looking real good, and stocks are looking ahead, looking at the optimism, the hope, the reopenings, the amount of cases not resurging. So there's a lot to be thankful for in stocks. But at the same time, as we look ahead into next week, we're going to get some numbers on the jobs. Now, obviously, the May jobs number is going to be awful, right? We'll talk more about it next week, but it's all expected to be a horrible number. Things that we're going to be thinking about are what our hourly earnings look like. That should be a big component because that starts to get into, wage growth and potentially wage-based inflation. That will be interesting. And then also the auctions that are coming next week. Those are going to be a big deal. So there's a lot to follow next week. But for now, great backdrop. Housing demand has started to pick up even in the face of this temporary nightmare that we're in. So it does bode well for us longer term here in housing. Hope this finds you well. Have yourself a great weekend. Bye for now.